Hello there, and welcome back to another episode of TA with MK. My name is McKay. Was gone for the weekend, so I wasn't able to get out any videos, but I am back in town now and ready to get back on, regular schedule. And I just want to do a quick follow-up to the couple of videos that I made midweek or towards the end of last week about the crypto Polkadot or Dot. We had a first video we put out was about the weekly and daily time frames with some entry ideas, and that criteria was not filled the first go around, but it was filled the second go around when I put out my follow-up video zoomed into lower time frames when it was again interacting with that same area. So we got that entry around 825. But for those of you that didn't get a chance to enter at that price, here's a follow-up video with some new entry ideas that I'm tracking. And if that sounds interesting to you, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. All right, we'll try to keep this as brief as possible. I'm not going to go real in-depth on my analysis in this video, just mostly a follow-up to the previous video that I've put out about Dot. Actually put out two videos. I will leave links in the description to those as well. The first one being the more important one where I kind of went over my daily entry ideas based on the daily and weekly charts. And, I'll just kind of briefly go over some of that right now. Now, price action back here between May, early May or mid-May, May 10th or so, till about June 10th or so. So for about a month time period, you had Dot kind of consolidating within this descending triangle, which is a bearish formation, has a 68% chance of breaking to the downside. So statistically speaking, it has a higher likelihood of breaking to the downside, and it did just that. On June 11th, it broke to the downside, went from around 850 all the way down to below 650, and then it came back up bearishly, retested that area yet again. So the underside of this previous descending triangle then became this major zone of resistance that it met, two different times, and sent it going the opposite direction. Now, in that video that I put out earlier last week, or mid last week, I spoke about this potential inverse head and shoulders that was forming. You can kind of see these triangles I've put on this chart to represent that, and this kind of became the trend line / neckline resistance for that formation. And what I was looking at was this zone, which I spoke about at length in that video, of around 825. And I mentioned that I wanted to see a daily candle body close above it, which we got here on July 31st. And we wanted to also see the following day's candle retest the zone, and for that daily candle body to also close above it. We got one out of the two of my criteria because the second day it did retest the zone, but it closed at 818. Had it closed above 825, I would have entered there. I did not. I put out a follow-up video a day or two later, which I'll also link in the description, where I zoomed into lower time frames and discussed as it was reapproaching. I discussed that it had retested the neckline of this head and shoulders pattern, which was bullish, which also was a high volume node over here on the daily, and it retested that. And then what I was looking for at that point, obviously the ideal entry would have been to get in right there, but within my Telegram group, I posted that we were tracking a double bottom or a potential double bottom formation on the lower time frames. I think it was the 15-minute time frame, and we were looking for a break and retest again of the 825 zone for entry. This time I wasn't using the criteria of the daily candles. I was looking, since it was the second time it was interacting with breaking out of that zone, I was being a little more aggressive with it. And once that criteria was met, we entered at that point. And kind of to get you up to speed real quick, we're now at we now have our stop loss, at break even. We've moved it up to 825 from where I originally had it, which was back down here at, I believe in the group I put that it was 764, something like that was my original stop loss. I'm now at break even, and we're looking at some new potential entry ideas, which I wanted to discuss just briefly in this video. The first of which we're going to focus over here on the left at this area where it's interacting with right now, which is just under the $8.90 range. That's an area that most recently was resistance here, where I have this yellow arrow. It was support back here, kind of acted as support around here. And so this would be what I'd call an aggressive entry, which is something when I go over the lower time frames will make sense. Just kind of a DCA or a dollar cost average entry. Your safer entries at this point would be a retest of this green box that I've now put between my original entry of 825 and the top of it about 850. 850 being the more likely area if we get a retrace that we see a bounce. That would be, I guess, your safest entry. The aggressive entry is the break and hold of this $8 in about 85 to 90 cent area. And then I have a new breakout entry, which I just posted in the group a bit ago, where we'd be looking for a break. This would go back to my daily daily candle rule of thumb, where I'd want to see a daily candle body close above around 920. I'd want to see the second candle retest that area, and for the body of that candle to also close above 920. At that point, if that break retest were to hold, I would expect us to go up and hit my measured move of this original inverse head and shoulders, which would be up just under $10, which to me would make a lot of sense for profit taking to happen under that level, just because it's an even number. It also has some confluence over here with resistance. This blue line I have, which I spoke about on my weekly or my video the other day where I went over the weekly and the daily. It's just an area that on the higher time frames, even the weekly, is resistance. That's what these blue lines are, by the way. All these blue lines I put are just lines that are weekly resistance, meaning if you're on the weekly time frame, those areas or zones, are support or resistance, in this case resistance. And so it's it just makes sense that if we get up to under $10 for many reasons, that there's going to be a lot of profit taking happening. It's a high volume node, it's an even number, and it's weekly resistance. But as far as our aggressive entry that we're talking about right now, let's hop over to the 15-minute time frame. I actually changed my mind right after I said 15 minutes. I'm actually going to focus on the 1 hour chart, and this is the entry idea that I would be looking for as far as an aggressive entry idea, kind of similar to my daily idea down near the 825 area, where the first time I was very strict and disciplined on my entry as far as I needed to see those 2 daily candles close above that area to consider entry. We didn't, it didn't do it, and so I didn't enter, which ended up being a good idea because I was able to get in lower, or at least I got a second run at getting in at 825. The same thing could be said if you were thinking about entering this area that I think is, what we're talking about right now, which is the 890 zone. You had resistance here. Most recently, it's been resistance several times. This would have been its first attempt to break out, and you would have wanted to enter that more on like a daily as well the first time around. But the aggressive entry this time around you could do, I would say, on the 4 hour, but we'll use the 1 hour kind of as the example. But if we could get a volume break, which let me turn the volume indicator back on, I had it off right now just to make the chart look cleaner. But if we can see some volume come in, some sort of a spike down here in volume as it breaks above this, and we get a 1 hour candle to close above this, and then the next candle to retest it, and then close above it again. At that point, I would enter, or in my case, add to my entry. I would put my stop loss back down here inside the pattern. For me, I'd be eyeing probably around like 848-ish, which would be, also bumping up my other stop loss from before. And then I would expect this to at least push back up to the top of this rising channel, which would also be in alignment with another test of this area up here around 920. If we're able to hit that, that's the point when you'd bump your stop loss to break even. So now instead of your stop loss being down here, below 860, you move it back up to break even at somewhere between, around 890. And then you just see how it interacts with this area. If it's able to break above that, retest, and start to push higher, then we can, update our stop loss and continue to move it up behind us. And that's another reason why I'm going to continue to leave links in the description for my Telegram group. That way you can join and maybe hop in there and keep track a little more up to date on my entry ideas and when I'm taking profits and when I'm bumping stop losses up. A lot of times I can't get videos out in time to discuss that stuff, but I will keep the group updated. So if you join the group, then you kind of get that little extra perk of seeing exactly when I've entered, what are my entries, what are my profit levels, and so on. But this is what I'm looking at on the zoomed in time frame for DOT. And if you want to take it a step further to be even safer, and this is what I'd actually recommend if you're watching this video a bit later and you haven't had a chance to get in on the first attempt of the 1 hour breakouts, watch for a 4 hour candle body. Let me actually erase all this stuff off the chart real quick. That way it's a little cleaner when I discuss this. Watch for a 4 hour candle body close above this level of 890, right around here, about 890. And then if that body closes above it, watch for the second one to retest it. So it's okay to have a wick back down into this pattern essentially, but wait to see if that body also closes above it. And at that point, that would be the safer entry idea for what I would consider breakout. And if you want some more confluence with that, Make sure you have the volume indicator on, and look to see if at least the first candle that was the breakout candle, which potentially could be the candle right now, wait to see if volume starts picking up. And I think it will if Bitcoin continues to push higher, which I will also discuss in the video that I'm going to put out after this one. So keep an eye on DOT. I do appreciate you guys stopping in. I should be putting out quite a few videos this week, so be on the lookout for those. And as always, if you guys are enjoying the content, please remember to like and subscribe, and we'll catch you tomorrow. It's